Hey everyone. Good evening. I'll give people a minute. Yeah, it should be linked to both, so then that way at least there's like double notifications in there. I already covered most of this in Discord today. Like I obviously put out quite a bit of notes in real time in terms of the risk to reward that's happening, but maybe if we cover this a bit. So we finally had our week come to an end for our December 16th flip. So there's multi flips that flipped on the 16th that we can discuss in a bit. And the biggest issue here that I've had is mostly that they stalled in a channel, so more so than anything else. So them just kind of taking this back into, let's see if this lets me pull up trading view. Oh, it's strange that doesn't pull up trading view. There we go. Okay, I might have to rotate between screens here. The one thing that really stood out is we started off the week in the channel. So I was like, okay, we ended up the week in the channel on Friday, sorry, and at 68.33.50. So one of the first conditions for this week was obviously where we open, right? Like that was a huge aspect of the kind of range we're going to see, the kind of breaks we'll get, correct? Like is based on first and foremost where they're going to open us, the kind of structure breaks we're going to get, and that's going to essentially determine basically our probabilities as we head into the last 2 weeks of the year, correct? So, and we had the stall. I'm going to delete some of this. So since we had a neutral to neutral break. So the biggest thing here, let's just switch back, was, because we're going to cover, we're going to toggle back and forth here a bit. One of the biggest aspects was where we would open, okay? Because this is going to give us an idea of the kind of probabilities we'd have. So a minimum acceptable gap would have been around 68.22.25 because it's more aligned with all-time highs. It's not ideal, but that's what could still keep all-time high odds applicable. And that doesn't necessarily mean for December 16th, but it means at least until month end, into the new year. Does that make sense? Like it just gives you at least that potential extension to kind of carry over. So that was one of the first conditions. But the most ideal range we wanted to open up was at least above 68.38, with 68.42.44 being a little bit more ideal. So that condition was obviously not met, right? So this is probably one of the most crucial conditions, I think, because of so flat open at 68.31, which can imply volatility as this is within the zone. So odds of retesting zone ranges are quite high. Okay, so 6788, 6796, like the area that we talked about, 6801, etc. You guys get the point, right? So like 6810. Okay, complete channel clearance above 68.49. That might be the best case scenario, but they would have to commit to snapping 68, 58, 68, 66, 68, 71. So that was if we had like a gap right off open like that, then they'd have to clear this area here. Okay, so this area is obviously a big overhead, right? So stalling here at 68, 58, 68, 66, 68, 71 is a big overhead if they stall. We can essentially kind of go with like this range in here. So successful in clearing early on Sunday, but stalled 68, 72 is where we stalled, I think, right, on Sunday. And it's pretty important that we know where, because we have to be able to track the conditions. It's like some things are met which can help offset others. Other things are not met, which, okay, so I would say like they, at the very least, everyone's in agreement that although we didn't get the best open, okay, one of the first things that we said we had to do if we came back and dropped, okay, or had a shitty open, which we did, what was one of our first conditions? Okay, this one wasn't that probable, so like gap opening ranges. All right, a progressive gap would be if they completely cleared 68, 66 near that 71, 74 overhead. And we can further discuss how you can see the difference in offsets here. So just remind me to double check the offsets, okay? We're going to double check the applicable offsets. So, and what I mean by that is I want to see if they had, let's say, opened sorry, sometimes when you switch the screen it delays it a little bit. Can you guys see it? I think it should pop up in a second. Okay, so what I mean by that is, okay, if let's say we had a gap, okay, around 68, 66, 72, whatever, around these core ranges, okay, close to like 68, 69, 66, 71, 74, so on and so forth. What kind of odds could that have given us? So basically, I just want to see, would this have given us the same applicable range in terms of downside? Okay, so had we had, let's just measure off the 7.2 range. Let's say they had opened closer to here instead, okay? Or even off there, like even off 6.6, even off 6.6, 6.4. These are all 35, 36, 37, 38 point breaks. Let's assume we had open around 7. Let's just go with 7.1, okay? That's about 40 points in range, right? If they open around 7.4, that would have been like that 44 point interval. We can keep it simple if you guys want by doing that, but let's just kind of stick with this. If we did something like this, okay, we want to see if this is equivalent to what's occurred on the downside. Does that make sense? Like in terms of like if they had cleared the downside, would it have been something similar? Because if they had gapped us up this high, then maybe we would have had the same odds in terms of like triggering downside. Do you guys get what I'm saying? Because that's how we can start to determine like where is there going to be massive structural support. Does that make sense to you guys? Like in terms of like open, close, highs, lows, okay? So maybe off an opening ratio, if that's about roughly 40 points, if we're going to work with 40, 44 point ratios, then I know that I've got quite a bit of support around 67.91, okay, from an open ratio, 67.84 or so from a closing ratio, from prior week's lows around 6777. And I just want to see if these add up to what I looked at in real time today, just to see if the offset would have been something similar, okay? And you can kind of see right now they're basically already aligning with these types of lows here around 68.12 being linked with this current low right here around 67.72, right? Or around these prior lows back in here, or like the weekly low, which is around 6766. Like this would be measured off of like this 68.06, 68.05. Do you guys understand the offset, like the differential in range? And like where we could start looking for like some pretty wide ranges of support, because this is, if this is what was implied on upside, this was what would be implied on downside. So I can already come to the assumption that based off these prior structural breaks, okay, especially the previous low before November 28th, because this was the last volatility period, right? We can already assume that they've basically broken down almost every single range here in terms of these highs, lows, except off this 68.06, okay, 68.04. Do you guys understand the concept here in terms of like this offset? So I know that there's going to be a ton of support around here, okay, 6864, 6866, give or take, or sorry, 67. Is it 67? Yeah, 67, 62, 67, 64, 67, 66. And there was quite a bit, evidently, around 6772, 6777, 6782, 6785, and then our 678991. So that makes me pretty comfortable, because I know that if they do come in clear or take out these December lows, that's how it would be kind of correlated with that. And that's what would really start breaking down structure, and it makes sense, because if they did it in the same type of range, basically you'd be taking out the means. So what I want to determine though is maybe from like the weekly opening ratio, closing ratio, what kind of area is very crucial for us to kind of come back and retrace. And like based on these ranges here, do you see how it's really aligned, you guys, with let me just point this out because I want you guys to be able to see it. Do you see how it's really aligned with getting back into the zone? Like this is off of weekly close, weekly open, and then that Monday closing range, okay? And we're just going off of like the 7-1 area because it is a really calculated spot, okay? So what do you think one of our first conditions is going to be based on weekly open, weekly close? And it's pretty obvious. What do you think our first condition is going to be? If you want to be exact, then you can just measure like that actual high range that occurred, which is like 41.5 points. Okay? But what do you think our first condition is going to be? And it's quite obvious. What do you guys think? Yeah, we have to try getting back into the zone. That seems pretty important, right? Especially around 68.33 and 68.31 intervals. So like getting back to 6792, 6789, okay, that's going to give us the best odds of essentially coming back and trying to negate this risk that we have, right? So we want to try getting back in the zone, okay? If we measure from like overall range, okay, we're probably looking at about like 58.5 points. And that makes sense because from weekly close to weekly highs, do you guys see how this is 58 points here? Are you guys paying attention to this? That's probably not a coincidence, okay? And I'll show you why, right? So, because this could be essentially like pretty close to like where they're stalling right now from like weekly lows. Do you see that? So I can say with confidence that 6772, that's pretty important that spot holds, right? So like this is heavily correlated with that weekly open, weekly close. And something else that really stands out in terms of 58 points or so is what? What really stands out here? Especially this past week if we're looking at like a 58 point ratio. What really stands out here? I'll wait for you guys to pick up on it. I'm not going to give you the answer because it's on the screen. Okay, so you should be able to figure that out on your own. So weekly close and weekly highs are a 58, 59 point ratio. What else is pretty applicable this week that's around a 58, 59 point ratio? Yeah, as like the contract rollover. So it's a very similar change. And those are also core ranges, right? Because like 52, 56, 58, those are core areas. So it's not surprising that when they rolled this, they rolled it off a core spot, right? And then opened at a core spot. And do you see how these are all in alignment right now with core ranges, right? So in terms of open to close, highs to lows, close to highs, open, close to lows. Do you see how they're all correlated around the same sort of ratio, which is roughly 58 to 59 points, okay? And those are also core ranges. Does that make sense? So I know that when I looked at it from an offsetting range, like based on what the range from Monday, and it's so crazy because they're right around our spots, guys, like 6, 7, 6, 7, is it 6, 7? Yeah, 6, 7, 7, 1, okay, or 6, 6, 8, 7, 1, 6, 8, 9, 2. Are those not our calculated spots? So the fact that they stalled highs on Monday there and then stalled 68.92 on Tuesday is insane. So, and all of these are mainly due to this flat open that we had, unfortunately. Okay, so we've come to the conclusion that 58.5 points is a pretty vital range. Is everyone in agreement? And the reason I'm streaming this is because I think it would have been hard to kind of cover just in a report. So at least you guys can reference this to the report if you need to. So do we agree from basically this spot here, okay, so 58.5 points, and weekly close or weekly open, which is 68.31, to weekly lows 6.772. Do we agree that 6.772.50 is a very, very, very important spot here? Yeah, along with, like, if they technically breach, they can maybe come back to 6.5. So I think that's a very important spot to hold. There is some, like, if you noticed here too, on a 1 minute, even though they breached below, they currently closed above. Do you guys see that? That's really important to know, okay? So there is a slight breach below, but they did close above on this. So our first condition for overnight, what's it going to be? Obviously, retrace 6.777, right? Try getting back over that 6.782. More and most importantly, we need to get back over 6.788, 6.789, 67.92. Do you guys agree? And then that 6.796 overhead, which was the big support area from last week that we discussed over and over and over again, why this range is important. Okay, and we had never triggered that the week before, so that spot was kind of left for some structural risk. And by the way, 67.96 is the 128 point ratio from 6.924, okay, and 6.928. Is everyone understanding why that area is important? This is the 128 to 132 point ratio off 6.796. Okay, that spot is, it has been super important. the crazy thing is on the old contract, it's our 67.44 spot. That's insane. Okay? And these ranges here are our 67.20, 22 support. I talked about these a ton in the November reports, if you guys remember. Losing 67.20s is huge, right? So on the new contract, it's the equivalent of 6772. And you guys can see just how crucial these areas are. This is 6744 is the same thing as 6796. Both areas of importance. Do you see what I'm saying? And so on and so forth. So like on the old contract, we failed to basically get back in the morning above 68.16, 68.18, 68.20. That's the same thing as us failing to get back in the zone. Okay? On the old contract, we failed to get back over 68.33, 68.31. Okay? We basically failed to get out of the zone on the old contract, and we failed to get back into the zone. Okay? Do you see the similarities here? So 68.38 or 68.28 stall in the old contract is the same thing as a 68.88 stall in the new contract. They couldn't get over 68.33. So it's just so that you understand the importance of the correlation to price. Okay? So kind of like here, 68.24 on the new contract, it's going to be directly tied back, you know, to 6766, 6765. Do you get what I'm saying? These are all, they're all correlated to one another. Like they're all super, super important. And understanding like the risk to reward in this is, I think pretty vital, because if you don't, then you're going to struggle with this, because this is kind of the range that we stalled. Okay. This is the same idea as like failing 68.33, but these ranges being tested here, it's basically what could be tested on the new contract, and it makes total sense, because if you were to break down 6722, 6720, because it's a core range, they all are going to take you back to core areas. So like on the old contract, if you fail again, that's going to take you to 6666, 6668. Do you get what I'm saying? 6668 on the new contract, or 6666, is going to be your 6720s. Do you get what I'm saying? That would be a core-to-core move. So, of course, there has to be a ton of support on the new contract around here. Do you see what I'm saying? So, on the old contract, that's going to be where you have to retrace. So, if you're retracing 6766, okay, 6766 on the old contract, that means you have to get back to 6820s on the new contract. Okay, do you understand what I'm saying? It's going to be, they're all core ranges, and that's the really nice thing about this contract rollover for end of year. And the even better part is we stalled core areas. We stalled at 6920s. Okay, those are core ranges. Do you see what I'm saying? And one of the biggest like takeaways for me this week was we opened in the zone. Okay, and the shitty part is we never tested these areas last week. Remember how I kept saying I wish they would have just tested 67.96 back here? This is why, because now it put us back at this risk, and like at the worst time of doing so, like post December 16th flip. So our first conditions are going to be, we want to try retracing back into the zone, right? And then we can, from there, we can kind of work forward. So like if we do retrace there, okay, you can see how there's, do you see the alignment even with like this candle's close around 67, 88? So that's going to be, it's a pretty obvious condition around here, okay? If we're looking at this from like these prior ranges, clearly we need to come back to, you know, 68.05, right? Off open close, 68.24. Like these are going to be like the really big overheads. What I really wanted to see though is let me just delete these. We're well aware of like overall risk to reward in here, right? In terms of downside versus like upside. I also wanted to make sure that the upside is the same. So I want to make sure that these ranges would also align in terms of upside. Okay, I just want to see. I haven't actually looked at this, but basically we want to see if like a 67.72 hold, okay, and the same range off these open closing points, which I think this was 3.3. This has to be more aligned with 9.2. Hold on. Okay. With 9.2. And this is 58.50 or 7.5. I just want to see if it's an alignment back to all-time highs. Do you see what I'm saying? Like, I want to make sure that they're cross-aligned, okay? So based on this is implying that there could be a slight stall. Do you see what I'm saying? Like off these all-time high ranges. Look. Let's measure off 3.1 and 9.2. Do you see what I mean? Do you see how this could imply maybe stalling the channel? Hey? And a lot of this is due to closing in the channel. Okay? On these very important flip dates. And then like opening in that zone. And also closing in the channel on the 16th. We closed at 68.48. Do you see how these types of odds, do you get what I'm trying to say? These are channeling odds. Like even though these are core ratios, it's kind of shitty because this is giving some slight odds of like a channel range. And that's part of the reason why they can keep this sideways. Do you understand what I'm getting at? So when I went back and looked at it from an overall range perspective, I wanted to make sure that these areas obviously align from highs to lows. So like right now we're already testing 157 point ratio. So I already know 173 points is going to be half of that 346. So this is going to be clearly a pretty important spot, right? Off previous all-time highs. Do you see where they're kind of situated here? Can you guys see that? Okay. And if we're looking at it off that 4.8 range, there's so much confluence around this 67, 72, 75. Okay, like this area here is quite crucial, okay, in terms of like structure, sustainment, and overall price breaks. I think there still is some slight risk around the means, around 6.7, 5.1, 5.5, 5.8, 6.2, but the first conditions tonight are going to be to see if they can at least try sustaining off that 7.2 and retracting or retracing the zone back to 8.92, and then maybe see if they can clear 9.6 and retest 68.05. Those are going to be the first conditions that we're going to likely watch for overnight and into December 18th. There were a few more flips for the 18th in comparison to the 17th. We didn't really have too many flips on the 17th. So I think importance of price closure on the 18th is a little bit more important. But the fact that they closed us in the channel on the 16th that's part of the issue of why they can keep this, you know, back and forth all the way till month end. Do you see what I'm saying? Like this candle here could easily engulf. Like they could take this down and take it right back up before the 29. Do you get what I mean? This is easily a back and forth type potential scenario based on where they ended up closing this candle here. Okay, especially like 68.24, that's a core close. Okay, but it's the December 16th ranges that are part of the issue. So and we have catalysts that could move us, right? So we've also got CPI, but a lot of this is going to be based on where they hit these ranges. And plus we also met the 69.20s condition the week before, so that could help us in terms of like sustainment, you know, this week and trying to protect these ranges. But right now, this is basically where they're trading within. So it's a pretty tough spot, I would say, like in this area here. 6892. And then when I went back and measured ranges off the 16th, okay, and we already talked about this earlier, it's the same thing. Like, we obviously know that there's going to be, we measured the actual risk in terms of like that 58 point ratio or the offset, okay, or 41 points, so I don't lose you guys, correct? But from the actual ranges that occurred on the 16th, you can see that there's a ton of support around 6.7, 6.4, 6.3, 6.6. Okay, that's also our 128 to 132 point ratio. Do you see it? Off the 16th highs. So it is a very, very important spot. And this is just based on like overall range in terms of like, had they gapped us here, okay? If they had gapped us here, we could have had some odds of getting that extension. So now it's pretty important that they, you know, try sustaining these areas here, try retracting them, try retracing them. Do you see the confluence off last week's lows to the 67.62? Okay, and versus like the 132 to 128 point range. So how important are 67.60s this week? I would say they're very, very, very important. Okay, because I think losing that is what could trigger these 20s. And I don't know if we really want to get back there, because in terms of structure, that would take us all the way back to our November 24th ranges, right? And that could easily put us at a ton of risk in terms of looking at this contract. Plus, from a range perspective, from highs, I'm almost certain that that's close to that 230 point ratio. Yeah, it is. So it's already pretty obvious that if they fail these areas, guess what? It takes us back to our 256 point ranges. That's what takes us back to 6696. And I mentioned this today, and I don't know if you guys were paying attention, but remember how I said on the old contract we had massive risk around 6796 or 6696? This is also the same thing as a 256 point range from highs, okay? So that is a very, very important spot. And on the old contract, it was 66.96. So it also would be reflective on this new contract too. Do you see it? On the old contract, it's going to be a little bit different. But it's a pretty big overlap. Like, this area here is a pretty massive overlap between the two. And that is a huge structural support if that range is lost. So another way you can think about this too is like, on both ends, if you're kind of measuring in between, because like the 24th, 21st, 25th are the areas that are going to have like the most implied range or risk, and that's basically the spot that's kind of stalling 256 points here. Okay, and if you measure the exact ratios of like 227 points from like where this range is, right? And you can see, like, you see how this is like to the next zone, 6688, 6689. So sustaining here is also equivalent to potentially getting us to that next zone, okay? Does that make sense? In terms of those ratios, whereas, okay, stalling here is what can get us back to 67.20s. Do you guys understand that from a risk-reward perspective? Okay, it's not 256 points. It's basically like the 26 to 33 point reduction of it, which I've gone over a few times. And then whereas if you're measuring this off of where we actually stalled, okay, back in here on like the 11th, it should take you back to these structures we had on the 18th, 19th, so on and so forth, which in reference, those are the 256 points from highs. Do you see it? Like the correlation with this and this. So it's kind of like that offsetting range, okay? And you can see from an open close ratio, they're pretty freaking close. Like, this is almost exact, especially off that November 20th candle ahead of the 21st. Okay, so these are, and look, this is 173 points from there. That's pretty crazy, which is half of 346. So, and we already know that half of this range here to 346 is 173, which is around that 6698. Do you see all the confluence here? If they were to bring this back to 6696, 6698, 6720s, that's a huge area of risk, because that basically puts us back at risk of like these November 21st candles. Whereas holding here or holding this range is what could get us back to highs or potentially get us to a new zone. Otherwise, you're back at risk of heading basically back to the zone area here. So this is like the best I think I can try to explain it, where it's not entirely overwhelming, but it's just so you can correlate the risk to reward with in terms of like these ratios. This would be the same thing as 256 points back. Currently market's working with like 227 point ratios. Okay, 227 points also gets you to a new zone off this 6772, 6763, 64 area. Okay, if they like were to, let's say, break there. Whereas if they hold 72, that's what can get us 7K. Do you see what I mean? Okay, like this is what would keep those 7K odds potentially alive. And I think it's 7250, not 7250. Let's see what that equates to. Yeah, exactly 7,000. That is insane. You guys, that is crazy that this plus 227.50 is 7K. Do you guys want this in the report? I know it's kind of overwhelming, but that's pretty cool. And if you struggle with the ranges, just measure them yourself. Okay? So that's a pretty big spot. Okay? We'll see if they end up actually holding it. Technically, they could still take this lower and still enter a zone, okay, by end of year or into like the first week of January. But that's going to be a very crucial spot to hold. If they bring it back to 6720s and hold, they can still imply getting back to all-time highs, because that would still be a core-to-core break. But obviously failing 6720s is what could put us at risk of 6690s. Okay, so I think that is pretty straightforward in terms of like downside risk, upside overall reward. Something that we could do, which I actually haven't done before, is maybe measure like the 227, like 227 by 2, like that's probably 110 to 113, 114 points. And that makes sense too, because we've been working with these core ratios. So far they're holding like close to 100, I think, off opening range, 111 so far off these lows. Okay, they did hit 107 points from that opening price to this low range today. From high range, they hit 116. So you can see how like these ratios are definitely aligning, okay? Like in terms of like, and I talked about these spots this morning, I remember. Okay, let me just copy paste them. And specifically on this week's range, and that's why 678582 was very important for real-time ratios today, correct? Yes, right? 115.5 is 6777. Where do they end up holding in real time today? So let's see, because these are the spots that I was measuring for you guys today in real time. So, and specifically off our 9-2 stalls, which happens to be our December 16th high, and 6692 is super, super calculated, right? So let's just measure here. 107 points was around 8.5. Okay. And then we said 110 or so was 8.2. And then my final target for the session today was 7.7. Okay. And we did go a tiny bit lower than that, which is why I figured they might breach this a tiny bit beneath 7.2. So let's see. 7.250 is also this next support range here. So the breaching price is probably going to be very similar, okay? And we also knew that 6.7, 6896 was calculated, and this is the spot that they just couldn't clear it back above, which is why they brought this lower and struggled, and that's kind of where they're stalling right now. So let's take a look. Okay, this afternoon. First, they initially tried holding the zone. They tried holding 8283. Another crazy thing is this is just measured off highs, but when I actually went back and measured off today's open, which was 686550, okay, these were also 88-point ranges. Isn't that insane? Like off the opening range. Isn't that crazy? So their core ratios, yes, okay, off those 6892 stalls, but they were also 88-point ratios. So that this 7-7 area was pretty important, okay? When we looked at it from like the actual overnight stalls, I think overnight they stalled, pretty sure overnight we stalled 8250. Do you see how that's 107 points off the actual overnight stall? I need you guys to see this. Okay, this was exactly 107 points from like where they stalled these overnight ranges. So I was like, okay, maybe that's kind of more factored in with that. Whereas like off the actual highs for the week, right? This kind of went a little bit beneath our 115.25, which is a third of 346 points. Okay, so I know that this little tiny breach right there, it does kind of put us at risk. Do you get what I'm saying? This right here. And I know it wasn't by much, but okay, this little point, okay, or 1.25, whatever it is, this is kind of giving us a tiny bit of risk, okay? So even though it was 107 points from highs, okay, off our 7.2 spot, 7.250, they just barely breached that. I didn't actually measure by how much, but I would imagine it's probably by that point to 1.5. Yeah, it is. Or 1.25. So they breached this by 1 point. Okay. Do you see the similarities here in terms of this? So I'm only a tiny bit concerned, not like super concerned, but if this is breaching below, they really need to try clearing above. And that 9.6 overhead stalling right here too so far. And then you can kind of see how it stalled just before 3 here. And then it stalled into the close here after just holding there. And I did say in real time, I think they'll try holding this 7.7 and try pushing back to 8.2, 8.3, which they did. And then ideally get back over 9.6. So I noticed that when they stalled 9.6, are you guys still with me? This is overwhelming, I know. I'm not going to pretend like it's not, but I just want you guys to see the price action here. You see how they started stalling this area here by roughly the same intervals? Okay, like that point to 1 point. Do you see what I'm saying? It's very similar. So there is some, they breach below, but they're breaking back above. But this needs to start offsetting. So what I mean by that is when they take out 9.6, you probably want to take out 9.7.25. Does that make sense? Like you have to start having some sort of offsetting risk for this to end up sustaining. And you can see once they started clearing better over 7.250, do you guys notice PA, how it became more constructive? Like pay close attention to this. When they finally went back over 7.250 without breaching it, that's how you got that 7.7 break. Do you see it right here? Okay, and now it's probably going to be the same thing. Once you start clearing over 7.7, then you can probably get that 8.2, 8.5 break, and so on and so forth. So once this starts progressing a little bit more, probably over that 8.5 area, I think is what it is. I think it was 8.5. That was the next overhead, right? Yes. Once you start getting back above there, I think that's when we'll start seeing some more progressive PA. Okay, because this was the same thing as 88 points from 7.172, okay, or the 107 points from 9.2 highs. Okay, so there is definitely some overhead here at 8.5. Okay, so that's really the big spots that we have to kind of try holding, try clearing, try getting back above. They're still holding core ratios here. Okay, off our 16th flip. I would start getting worried when we start breaching like 115 points. Okay, which is close to 6766. And that's a core to core ratio. Okay, is everyone on hopefully the same page? And if you need to look at it from a support range, just retrace it up in terms of like these open closing candles, okay? So from like the 12th, okay, that's going to align with 679796. So it makes sense that obviously there's overhead at 9697. Do you see what I'm saying? 99. Okay, if you get it back to these ranges here, these should align with the neutral ranges are aligned right now with their core areas. Like so neutral ranges are aligned with core ratios. So 6924 is aligned with 6808. Okay, do you see what I mean? 6812. And then when I measured earlier today to 107, these areas here should be aligned with 68, 20, 21. Okay, and that's basically the area that we lost. This was the same thing as losing 107 points from 692875. And let's put it exact. Hold on. Do you see that? This here? This is the same thing as the 107 points being broken. Okay? And if that helps you guys in terms of like just understanding range a little bit better, then just do that so that at least you know why. Write notes on your chart so that you know why these areas are applicable. So like, you know, if we went back to here, oops, that's going to be 128 points. Do you see what I mean? If you went back down to here, then you're back at 132 points. Do you see where they started stalling? Where did they stall? 132 points from highs. 692875. 6925. Do you see it? That's the 132 point stall right here, is what this was. So, and this is when they started failing 117 or 107, 105, 110, 115 point ratios. So these areas here around 68010, 6812, those were the 107, 115 point ratios. Do you see what I'm saying? Even though they're not core spots, they were core ratios, these areas here, which is why they ended up taking it down to max range. So when I took a look at this, okay, off closing range, you can see that this 6925, okay, that's obviously aligned with us getting back to the zone. Do you see it? So clearly there's a lot of overhead around 6793, 6796. Okay, if we do 128 points from there, from the closing point off 2.5, it should be, yeah, it should be the 9.6 area. Yeah, it is. Okay, like 9.6, 9.7 range. So that is a very huge spot to get back to. Okay, so at the very least, those are going to be our overnight conditions, and that's where they stem from. Just so you guys are aware, because I feel like some of you might not be in terms of like why those areas are such a big support range. And then, are you guys still with me? This is why it's important to try getting back to 69.20s. Okay? Because 69.20s are linked to all-time highs. Okay, is everyone on the same page? Or sorry, not 69.20s, 68.20s. Those are linked back to all-time highs. So we know our downside risk. We know our massive structural support. We know which areas we have to try to retrace. Okay. And I also would probably look at the 58 point range from here too, because that's probably going to have some confluence. I would bet anything, because that was the rollover, and that would take you back to basically your weekly open off these lows. So right now, these weekly lows are directly linked to weekly open. Do you see what I'm saying? like that 7-2, it's linked to that weekly open, and it's also linked to the contract rollover. So it is a very, very big spot. And just from a very basic point theory, obviously if we retrace back over 66 points, we'd be back in the channel here. Okay, so kind of like that here. You can see how these areas here are going to be linked with core ratios, 107, 108, 110. Okay, off these lows, these areas would be linked to getting back to the zone, or 68.99, 6,900. In terms of like a max range, I don't see that happening, to be honest, but you can kind of see. Remember how I said last week losing 60? Remember how I said last week that if we lost 69, 05, 06, that's going to be massive risk for us? Do you guys remember that? Do you guys remember this? How I said if we lose 69, 05, 06, that's like where the big risk starts. Well, ironically enough, that 6772.5, if you retract back 132 points, that's 69.05. So that area is coming back into play once again. 69.05 was important because it was what? Try not to get this wrong, please. Why was this area important for us? It was a core ratio, right? Not a core price, but a core ratio. So the fact that that's also, in terms of max ratios, like 120, 132 points, that's also now going to be a max ratio. There's a ton of alignment around that 69.05 area. So on a wider scale, I guess we can look at that for overhead. Maybe not for this week, but we'll just kind of keep it in mind if they end up getting back to here, like back to these core ranges here. But I feel like conditions are going to be pretty straightforward in terms of sustainment, retracement, overheads. Okay, we have CPI tomorrow, and I know Japan has their interest rate, I think is it overnight? I think it's overnight. Yeah, into like early morning. So tomorrow. So I mean, that's definitely enough to at least move price if they needed to. And we can kind of just maybe factor in like that 58-ish points from here, okay? Because technically that 58-ish points from this range here, it would at least get us back to retesting our weekly open, okay? Which is kind of ironic that it's kind of linked with these spots here. And I think that's probably the minimum range needed for like this thing to have any sort of like confluence. So same with the channel. So listen closely, guys. Even though the channel is not a core spot, these are core ratios. 76, 77 points. Those are core ranges. Do you see what I'm saying? These are core ranges. Okay. So right now we are working with core spots, and I think that 115 point ratio from here is back to the zone, like back to 6888. So that's probably also an important thing to note, because that's where they started stalling this week, was off the 110, 107, 108, 115 point ratios. And if they're successful in getting us back to these ranges here, okay, that's what could get us back into the channel, just on a wider basis. Even if they took this even a little bit lower, the way that I would look at this is maybe the entry into the channel, or even like the highest open, highest close. Okay, that's probably our area of support. That's the 173 point ratios, and that's probably off the highest open, highest close. Okay, and that this area here off all-time highs in terms of our highest closing point for the index, which was the 69.18 area, okay, is linked with 6744. Do you see that? So I already know that 6744 is going to be huge. And in case you forgot, 6744 on the old contract is linked with 6686, 6688. Okay, so that's a pretty big area to lose. So I think we have a fairly good idea in terms of like the risk reward ratios that we're now working with. Okay. Any questions, guys, before I end the stream, or are you guys pretty set on the kind of, at least the ranges that you could expect? Like, you shouldn't be shocked if you see them. And you should also be paying attention to like which structures flip. So the 18th, we do have the 2-day that flips over. We have the 3-day flipping on the 19th. So tomorrow is the last day that factors in this. Okay. And the interesting thing about this structure is you see how it took out the lows, but it hasn't taken out the highs. So technically this could engulf. I don't really see that happening on this time frame, but usually things like this, they could be like a piercing type candle, which maybe means that they could bring it back to like 60, 68.50, 68.48, maybe back to the channel by end of week. Do you get what I'm saying? Like by Friday. That could easily be one of the scenarios. And I think us getting back to the channel, which is basically us getting flat on the week, is probably going to be the best for our odds that could keep us extended through the 22nd through year end. Okay? Because we have our big flips on the 22nd, the 24th, the 29th, January 2nd. Looking at this just kind of looks like a bigger flag potentially on a wider pattern. 1, 2, 3, 4, 5, 6, 7. This is the 7th bar too. So this is the first exhaustion / expansion period that runs till the 22nd. So price between the 16th and 22nd is super important, right? Because this is our exhaustion period on a 7th bar range on our 4-day that we've been tracking. And basically they can take it back and forth, back and forth. Do you get what I'm saying? And you'd probably want to get back at least over, oh yeah, that's hilarious. So the median range right now is 68.30, 175. That's not a surprise because that's literally where we open the week. So getting back to 68.31 is also half the range on this frame. Okay, does that make sense? And that flips over on the 22nd. So the last day for this candle would be Friday. Okay, so Friday is a very important day, the 19th. That was my most important flip date this week. No, it's not a flip date. It was the most important structural date ahead of the 22nd flip, because the 22nd is the bigger flip after the 16th and the final date is the 19th. Does that make sense? So ideally you'd want to try retracting this range. I'm just going to draw it like this on the report so you guys understand what I'm getting at here. Because then if you carry this over on a wider time frame, okay, this is also the 4th bar here, on a wider time frame, like the 7-day, okay, 7 days a pretty nasty bear pattern, and we've been watching this one for a while now. Okay, this flips on the 23rd, so the 22nd would be the final day. So if they don't retract enough range by the 19th, that is what could give you continuation on the 22nd flip date to the downside. Do you get what I'm saying? Because this doesn't flip over until the 23rd. So this is what could turn into like that bigger, nastier bear pattern. Okay, is everyone on the same page? So our conditions that have to be met by Friday is what? To avoid this from happening. Don't get this wrong. Because I need you guys to understand conditions, because I think that's where you guys are struggling. And if they do that, then we could come back and take out 69.28 before month end, because this could engulf by the 29th. That's what would give us an engulfing pattern and a 3-bar flag. And then maybe continuation into the new year. And we get like all-time highs or new all-time highs on January 2nd. Okay? I need you guys to see the vision. Okay? It's very important that you guys start seeing this. The 9 days, what could start flagging on the 19th. Okay? And could then give us a bigger continuation through the 2nd. But you guys have to start seeing it for yourselves. This is a bear flag, but not a nice one because it didn't take out lows. So this is a good idea of how it could stay sideways, okay? No, what do we need to retrace by? What do we have to retrace by Friday to avoid this from happening? To avoid this from having continuation down. What? No, the 90 would just have to make a flag. What do you mean? Yes, we need to get back to weekly OR, okay? Everyone's on the same page? Not getting back to weekly OR is going to give us a very, very... I don't think the 90 has an odd... This can't engulf. What are you talking about? No, no, no. This is not an engulfing setup. This is a potential 3-bar setup. That's not an engulfing setup. This is an engulfing setup. This can engulf the 8-day. This can come back, take out this. Because it didn't take out the high, but it took out the low. Okay? And this runs till the 29th. Your median point between the 16th and 29th is, I think, let's see. The 16th and 29th. It has to be the 22nd, 23rd, I would think. So, 4 bars. Yeah, 22nd. Okay, so obviously where you close on the 19th is going to help you determine your range for the 22nd, right? Your range on the 22nd, if you meet your conditions by the 19th, which is what Vinci said, getting back into the channel, okay, or back to weekly OR, which is this range here, okay? Basically our 68.24 to 68.31.33 is what could basically give you that. The 18th doesn't have too much pressure. The 18th, okay, the 18th, what's the roll for the 18th? I want you guys to give me the roll. What are the rolls for the 18th, the 19th, and the 22nd? Okay? You guys have to get better at conditions. What's the roll for the 18th tomorrow? What's the most important thing that the 18th has to do? The 18th's not a big structural flip, okay? And it doesn't have much pressure prior to a big flip. What is the most important thing that the 18th has to do? No. You guys are not listening. What's the most important thing that the 18th has to do? If it does it by that day, then it's fine. It just has to sustain. It just has to hold the line. That's it. Okay? It literally just has to hold. Okay? That's literally it. It just needs to hold. That's it. Okay? Everyone's on the same page. It just has to hold. That's it. The 19th, however, then there's a lot of pressure that it better retrace. Are you guys with me? If you don't retrace 6833 on the 18th, it's not the end of the world, okay? Obviously, we want some progression. We still want to try getting 6888. We still want to break 6796. We still want to try getting to those areas, okay? But it's not a super strict condition that we have to get back to 6831, 33, whatever, okay? On the 19th, however, it is, because then we're at huge structural risk for the 22nd. Is everyone on the same page? And that's what could keep us extended till month end and year end. So basically, yes, we could still get like and that's one reason why we could have a flat CPI. I really hope we don't, but if we did, it could be because of that, okay? If they ended up bringing it back to here tomorrow, then great, because then we could just have that continuation back to 68. Remember how I said we could get back to the channel, or 68.58, 68.66? like on a Friday, that would be good, because then we'd have odds of engulfing, since that 8-day or whatever it was could engulf before the 29th. I think you guys are also forgetting something. What's next week? What's happening next week? Yeah. Okay, so it's Christmas week next week. It's a shorter week. We don't have that much time. Do you get what I'm saying? So even though this runs till the 29th, that's only 1, 2, 3, 4. 4.5. Yeah, roughly 4.5 trading days. Okay, so because the market's closed on the 25th, we have a half day, I think, on the 24th. The 26th is Boxing Day in Canada, so our markets are closed, but in the States it's not. Okay, so it's not very much time. It seems like a lot of time from the 17th to the 29th, but it's actually not. Does that make sense? Like it's really not from a market hour perspective. So technically speaking, okay, if those conditions were met, that's the only way that you could maybe, okay, get to like what we kind of said right here, right? Like on these time frames, like the 7-day. If this retracted, okay, you could get there as early as the 22nd, 23rd, because your 7-day could also engulf, correct? Do you see what I'm saying? Like if you met 6833 as early as tomorrow and you cleared as early as the 19th, sorry, by Friday, that's the only way that you could get back to this area here. Maybe finally retest 69, 31, 32 by the 22nd, 23rd. That would be an engulfing scenario on the 7-day. Okay? But for that to happen or occur by the 28th, 29th, like during this period, you don't necessarily have to do all this. You just have to at least get back at least to here. Does that make sense? By this day. Okay? And then from there, then you can kind of work with that, because the market would be closed this day. Okay, and then you'd come back maybe the 26th and then test it ahead of like the final days of the year. And that would look something like maybe a flatter session here and then continuation or something like that there. I'll include these mock scenarios for you guys, but what's next? Gap down? Well, if we lose 7-1 and 6-6, we'd be looking at the 67.44, 67.20 to 22 areas. Pretty huge. That's not a fib though, that's a calculated range. What you could do though, guys, is you could use negative retracements, and I find that they're really, really helpful, especially if you're not someone that's good with math, like in terms of like applying calculated spots. Okay, and it should align pretty close to those areas. So like 6744, okay, 6741. Do you see what I'm saying? Does that make sense? So if we did like a negative 50% fib, okay, you should see like kind of the same range in confluence off these areas here. If we looked at it from like high ranges, it should start aligning with the zone area like 6732, 33, that 66, 88, 66, 96, 93. Okay, this is from like a max range scenario. This is if you want to use fibs, but I'd rather use the calculated spots instead. Hold tomorrow, retrace. What do you mean retrace to 772? Oh, well, we still have this range in here that we talked about. The most confluence was around the most confluence was around 6.2 to 6.6, but basically we'd be re-entering the means. Technically, you could still back test there, and like that's kind of like a mid-core hold. Within your condition would be you'd have to get back to 68.20s. Or at the very least, like 6, 6, 7, 8, 2, 8, 1 core ranges. I feel like if they did that, though, your odds would be very, very low that you would hold. So it's not that we don't have support there, we do, but you're also forgetting that from a range perspective, you'd be failing. We haven't hit 128 points yet. Okay, or 132, 33 from our 16th candle. Okay, and you need to measure from the 16th. The 16th is a very, very important flip date. So, and that's what extends you through the 22nd, okay? Thank you, Stockstream. Yeah, this is a really tricky spot just because obviously losing these areas. I like that the 132 points too from like the December 16th areas aligned with us basically still holding the channel or trying to avoid it. Because right now, if we re-enter another channel, which is 6744, 6733, we're at huge risk because even us opening flat in the channel this week, we knew that we were kind of screwed. Do you guys agree? So think about it. If we opened beneath the channel, okay, at like 6831, do you really want to go down to 6733, 6744, right? In terms of a risk to reward perspective. Yeah, well, at least we're aware though that like the closing price on the 19th and the range on the 22nd is what's going to help us determine that. Even though tomorrow is CPI, from a calculated time perspective, the 19th is more important, which is kind of funny. At least in terms of retracement, right? Tomorrow is more crucial for sustainment of price, I think. That's good to know. I haven't watched any of your streams recently. I have to hop on next time. I haven't been streaming too much either, but I guess we'll have to see. It's been pretty wild though because they're stalling our exact spots. They're also breaking on the exact days. The most reliable time frame from now until month end is still that 4-day. So, and typically we get 7th bar exhaustion ranges. So this is between the 16th and 22nd. So price between now and the 22nd is very important because this is what could keep us basically durational till end of year. I think another thing too that we could maybe measure, you guys, is our 17th to 21st range, just in terms of that candle. And a very, very base theory too is if you hold 75% of your range, you almost always have pretty decent odds of retracing. Do you know what I mean? So like 6766. Okay. Do you see what I mean? 6775, 6772. Do you see how these ranges would apply? I know it's kind of hard to see here. Wait. Open to close ratio. Do you see it? And look, this is also good to use because it kind of aligns with this week's opening range. Do you see that? And then you can kind of see how there's still technically some support there. And it's pretty cool too because that would be the 132 point range. Okay, off this week's basically gap opening from that contract rollover. Oh, no, not Stock Guy. Stock Guy is hilarious. I haven't talked to him in a while. But that's just a general rule because you guys know what the 75% rule is, right? In terms of like forming a 3-bar pattern. So if we form this, okay, you could form this, basically. And this period makes the most sense because 1, 2, 3, 4. So you have to kind of try seeing this without it forming. So if this is basically off 4 bars over 4-day periods or 4-day intervals, then I already know that this is over a 16-day period. Do you know what I mean? And on a 16-day, we're stuck inside. I know you guys don't want to hear this, but, this is what could prevent us from breaking either end, okay? This is the shittiest setup that we have and the risk that we're facing, but that's why it's so important that they try breaking us in between these cycles. So the 16th is very important because now we've kind of gone into like that inside range, okay? And your median point in here is going to be, like I said, like the 5.5. So yeah, definitely the 23rd. I think the 23rd is for sure, like the 22nd and 23rd are going to be like the cutoff ranges, because this is like for the 2nd, but I'd also measure from the 31st since that's the final day before that candle closes, and the first we're closed. So 10 bars, 15 days, so 7.5 days, or 5 bars. Do you guys see the importance of the 23rd? That's from a calculated perspective, okay? So the 23rd, okay, is essentially the day that's going to determine if we're going to stay stuck inside until end of year, okay? And I would carefully watch the time frames that are correlated with the 23rd, like the 7-day, okay? Because this is, like I said, the time frame that could have like a nasty bear reversal. It could bullish engulf, okay? Do you see what I'm saying? And measuring the range within this frame is probably vital so that you can at least have an idea. So like, you know, 68, 72, 73, or like the range in between here, just to kind of give you guys like at least a better idea of that. But at least that way, if we don't break range on the 22nd, 23rd, I wouldn't be surprised if we stayed stuck until end of the year. Do you know what I mean? Like if they didn't break either end. And we had this happen in 2023, if you guys remember. Remember when I predicted us having 10 days of sideways action into the end of the year into 2023, and then we basically just kind of traded sideways back then? I don't know if you guys, some of you might have not been around, but I think that was back in pretty sure that was end of 2023. Let me see. I think it was, yeah, it was this period here. Remember when we did like literally nothing, okay? Unfortunately, this is kind of a similar scenario. And I think I talked about that back, it was kind of similar time, like around the 19th, 20th. So if you guys want like a pattern or a date that you could reference, this period here from back in 2023 is very similar, okay? And if you search this in the Discord, you probably could find some notes from why I thought that was going to go inside and stay stuck range bound during that time. Because I remember people were calling for a Santa rally then, and I was like, we're definitely not getting a Santa rally. And I think we stayed within the 132 to 128 point ratio that time too. It was very, very close. Do you see this? It's actually very interesting because that's basically the same thing, and this is like where we stayed stuck until end of year. I'll put this in the report for you guys if you guys want to go back and look at it. But okay, we can talk about Bitcoin a little bit, and then I'll probably just wrap up the stream so I can put out the conditions for the report. Let's see. Well, crypto, we had said that is going to get back to that 93 to 96K, and then I'm not going to lie, I kind of stopped following after that. I do remember like 85 to 86,000 was our huge spot. Let me just reset my ES chart though, so I don't. I lost it over the weekend too, so I don't want that happening again. Okay, so crypto. This is not my crypto chart. Where is my crypto chart? Here it is. Okay. Okay, so we did meet those conditions though then, right? Because wasn't the idea that we had to get back here? Crypto moves in 11 to 9-day intervals. I don't know where my other crypto chart is that has the intervals on it, but let's just see if this was 9. Yeah, this is 9 days. You see when they turned it around? Okay, so we can probably manually tag these days off when we retraced our 93K. Okay, so then this basically has to try turning around no later, I would say, than probably the 21st. And you see how it's kind of holding off that 86,000 right here? Because didn't we say if this breaks down this 86K, this could see another 6,000 point reversal? Because basically, crypto moves in 6,043 point breaks. Okay, so this is essentially the calculated range it has to clear. And there was conditions that had to have been met. I'm pretty sure when we looked at this, this isn't the exact frame. I'm pretty sure it runs in 9 to 11-day intervals. Okay, so you see the 11 days here from this low? Right here? You see when they finally brought it back? Okay, the only issue with this is I would have preferred it broke these ranges on the 2nd versus the 3rd. So that was part of like the earlier issue I think that we had with this. And then you can kind of see how they started breaking down range right here. So I would imagine that off this stall on December 3rd is probably where they started triggering high or lows, sorry. So like right here. Where did they trigger that day? Kind of hard to see with this. Is that the low? Yeah, it is. Okay, so maybe mark these in accordance to like highs and lows. So like this would be off a bear range and a bear range. Like maybe mark them red so it's easier for you to understand this. This has to be green. Okay, so then your intervals in terms of time, align them with 9 to 11 days. It works super, super well with crypto. So do you see what I mean? You see how this was conflicted? And then it brought it down. This should have been ideally a range break on that day. That was the 9-day interval from here, and it stalled. So that could be an issue. And the reason why you could maybe have some extensions here is because this was the more appropriate time frame. If you're measuring off when they actually triggered the lows, that's how you could get those ranges until year end. But I think the earliest break would be the Sunday and then the 24th. So that would be based off when the structure actually broke. If you want to measure from the date that we actually came back and took out 93K, even though we never closed above, which would have been like the 9th, the turnaround time has to start today. Do you see what I'm saying? So at the very least, you need to probably retract this 89K. Okay, because this is linked to this. But your cutoff would be the 21st because that was the period that it stalled. Which is likely going to be off these 11-day ranges here too. Yeah, it is. Okay. Because if you don't, then you could have continuation to the downside because this candle here, it would be linked to the 26th. Does that make sense? You can shade those in red, I guess. And it would be around a 6K continuation because that's what we said. Oops. I don't know if this is, I think I have a fib on this, but I think I also have, I think this is also the same in terms of range. Let me just double check though. from 87K. Yeah, probably closer to like 81,000. Okay. Off 86. Basically 80K. It's pretty close to there. Okay, like around that range. And that's basically the risk that we have into year end. We talked about this, I think 2 or 3 weeks ago. Okay, so crypto probably has some pretty tight conditions that it needs to try sustaining. So sustainment, I think, on the 18th, 19th, based off these highs. So based off here, okay. So the earliest point of turnaround could be now. You can maybe shade those in white so that, because it's just the sustainment range off these highs. But in order for that to see that type of continuation, okay, you probably have to retrace at least this, probably at least 87K tonight, okay, and negate this. That would probably be my first condition, is getting back to 87K today, and then try getting back to this 90, 89 range, maybe by Friday, and no later than the 21st, you'd have to retract 92 area, otherwise you could be back at risk of, because let's say you get to 92 but you don't clear around the 21st, 22nd, you could, let's say you make a lower high or something, you could still bring it back to here. So I think the 2 case scenarios, if they push but not high enough, it could just be flat for the year. Okay, does that make sense? Like where they could just take it back to 86 and just flatline here. Okay, that's one scenario. If they brought it back here and actually pushed, then you could get that bigger push to 100K to end the year. These would be the scenarios for crypto, right? Whereas if they brought it here, stalled, didn't even bring it back to 92K, let's say like here, then that's where you can make those lows by end of year. So you just have to kind of track your conditions from now until year end. So today's condition is going to be getting back over that 87,000 mark and ideally back over 89K. Thank you so much. Okay, I'm going to end the stream, guys, so I can finish the report. So at least that way we have some conditions for tomorrow and for Friday. It's going to be pretty cool if we actually end up getting a flat CPI. I hope we don't, so that we don't stay stuck inside until end of year like we did back in 2023. But if we do, we just at least are aware that it could be the case, and then we'll have the pressure on for, I would say that if tomorrow's flat and they get us back to 68.30s on the 19th, okay, but they don't push us high enough on the 22nd, 23rd, that is how we would get that inside range scenario. Does that make sense? Because it would basically test both sides, but neither end breaks. That would confirm that we'd stay sideways, okay? If they get us back to 68.30s on Friday and then they push range on the 22nd and continue on the 23rd, then we could have that outside break or flag break and continuation till year end. If they don't get us back there, okay, and they stall on Friday, then we could get that bearish retracement come Monday, Tuesday, right, for that 7-day star reversal or whatever. So you have to kind of start thinking about these things from now. But I feel like we'll have a very good idea on the kind of odds that we have relative to what they do by, honestly, as early as tomorrow. Like, I feel like tomorrow on the 19th is kind of going to set the tone for the remainder of the year. And look at that. They're already back over 6, 7, 8, 8, 8, 9 as we've been talking here. So, all right. So everyone's aware, 67, 82, 67, 72, sorry. Huge spot for us. Okay. We do have some downside risk. Okay. Tomorrow is really important that they at least try getting us back to retest these ranges in here. And we'll kind of just work with whatever scenarios the market gives us. If anything, maybe even focus on, I haven't really talked about it too much this week, but Um, silver has been super strong. I talked about this yesterday. It's continued today. Okay, you could go back and watch gold again, which we've talked about a lot. And gold has been moving. Where's my gold chart? Where's my gold chart? Here we go. We stalled at our exact range last time, okay? And gold had very good odds of turning around after here. So we're back at our 4,339. They pinned exactly there yesterday, which is really increasing our odds of getting back to our 4,382, which is where we stalled last time at 8.1. And keep in mind, if we clear these areas, it's what's going to put us back at that 5K range into 2026. So these have been really good alternatives. The timing aspect has been really good. So the 19th also. Yeah, but for me, it's more so in terms of like the structures, because the 22nd is one of our final, I guess one of the final important flips for the year. And the 19th would be the final trading day. Okay, for that for a bunch of candles closing that day, if that makes sense. Whereas the 18th, we don't have too many candles, I guess, that close up tomorrow, if that makes sense. I don't really know how else to make that make sense, but there isn't as many closing candles, right? And if you think about it from a time perspective, your median point between your 16th and 22nd, 23rd would be the 19th, right? And it kind of just carries through from that. All right, I'll wrap that up, and then I'll have that posted probably in like the next 15-20 minutes or so. It's going to be very basic conditions though, guys, if you're okay with that. Please just maybe reference the stream, just because it's kind of a lot, but I'm just going to leave it very, very basic for the conditions that have to be met in terms of tomorrow and Friday. Basically, our goal is to get back to we're just trying to get back, honestly, to our weekly open is literally all we're trying to do. And it makes sense from a range perspective too. So, and that if we end the week flat like this, in theory, this could, let's say they retract this, okay, back to even to 68.20s, okay. Ideally back to like, let me see. Sorry, this is my zone template, so the fibs are color coordinated. But yeah, if you see that if they bring us back there, it just takes us back to that 50% range, okay? So you wouldn't want to close too high either, if that makes sense, because then you also don't, if you're going to close above 68.31.32, then you better push to 68.50s. Does that make sense? Like you can't close above 3.2 and not continue like that. Then your risk is super high, because that's what could form like a bear flag. Does that make sense? Because then you'd be closing slightly green, and then that could drop you down. So if you want this to be a nice bull-like pattern, you'd probably want a flag or like a star reversal like this. Okay? Does that make sense? Otherwise, if you get something like this, you could end up like where basically you close like this on the week or something, like, sorry, this, like that, let's say, okay, then you could end up having a bear reversal or something. And this could happen, guys, if they leave that little bit of room. Does that make sense? Like, this would be the shittiest scenario, but if they really, you know how like they didn't take us beneath 6, you know how they didn't test 6796 the week before and the week before that, and I was like, God, I wish they would have just tested it. You know how they didn't test 6820s the week before, and I was like, God, I wish they would have just tested it, because it was like 6831, 33, 32, and I was like, every single time they were leaving like a tiny, tiny bit of room. And you know how they tested 6801 but not 6796? Do you see what I'm saying? And they just kept taking it, but like not low enough. Okay, so if they wanted to do something like this, they would hold the line. Okay, so they'd probably hold 6771, 72, and then maybe leave this risk. Does that make sense to you guys? They would leave it for like just like the final week of the year. And it's not like it'd be, a huge differential in range. It would just be the same exact thing that they did previously, where they didn't take out the areas that we would have preferred that they did. Like back in here when they kept refusing to take out 67.96, 67.88. It's that 13-point offset that we talked about in the report 2 weeks ago. Remember? Please tell me you guys remember this. When we talked about the 13-point ratio, everyone remembers this. Hopefully, I hope so. Okay, they could leave it something like this. Okay, they might leave that 13 points. Okay, that would be the case if they retracted back above weekly open, weekly close. Okay, and brought it green, but not green enough, because this could set us up for a bear flag. Does that make sense? That's how you could get something like this. And it would be super annoying because it's not like it's that much range. Does that make sense? And then you're still kind of stuck range bound. It's still the same thing. So that would probably be the final scenario I can think of. I think you guys have every single scenario based on every single close and every single open. So there's no way that we don't know what could happen, because I think I have every single structure at this point memorized. Like, and the date and the price range. So I think we're prepared. Based on where they stalled this week, though, I feel like we have pretty decent odds that they could get us there. We'll see. Hopefully they just give us like a nice star reversal tomorrow and get us back in here. I feel like odds of getting all-time high breaks or even a retest they're kind of slimming down, but the only thing that helped is we did get 69 20s and 30s, which at least that can give us some odds into beginning of the new year. If they did decide to like delay this, at least this condition helped keep us extended at least until the week of January 2nd. Okay, so like even if they took us sideways, I don't think all-time high odds are entirely off the table. Okay, because that condition on the 11th extended us till the 2nd. So it just might be sideways action though until then. But anyway, we'll have a really good idea based on what they do tomorrow and Friday. And thank you so much, Stockstream. That's so nice of you to say. Okay, where even is my other? Oh. You guys are gonna look at this now. Now it's gonna be like too overwhelming. Anyway, okay, I'm gonna finish these conditions. Just give me